back. Michael Harding here from the Academy of Financial Markets. I'm your Chief Trading Instructor. In this lecture, I'll show you the main difference between trading stocks and trading Forex in terms of commissions from the broker side. Now, we already know when trading Forex, the commission comes from what's called a pip spread. And the pip spread is the difference between the bid, which is on the left side of your trade terminal where it shows the price. So in this case, the bid is 78.30 and the ask is the 78.33. And the 78.33, this is the raised price that the broker raised it to, basically so that they could make a commission off of every trade that you make. Okay, so we already know this because we've went over this in previous lectures. Now, with stocks, there isn't necessarily a pip spread, and instead most brokers would charge a flat rate of around $10. Some brokers might also include a small spread as well as the $10 buy-in. So that's something that you want to watch out for when deciding on a stockbroker. So I've been using CMC markets for the last several years now, and I would highly recommend using these guys if anyone's interested in going and trading stocks. I'm not going to go over too much detail how to use the trading platform in this lecture, but I will definitely create some videos later on in the future where I give you guys some tutorials how to use this CMC interface. So as you guys can see here, if I just take a look at this is a Royal Bank of Canada stock with the TSX. So there is actually a small spread here, and it's 1 cent. So if I were to purchase 100 units, there would be the 1 cent spread. So it's not pips in stocks, it's just the cent. All stocks are probably a little bit different though. Let's take a look at Apple for a second. Okay, so if I were to buy Apple again, yes, so here it's a 1 cent spread, but then there's also the $10 buy-in. So I would highly recommend anyone that's interested in stock trading to take a look at CMC markets. They have the online application, which is available for all desktop and mobile devices, and they also have the apps available on Android and iOS in the App Store. I've always recommended anyone that gets into trading not just to focus strictly on currency pairs. You should also diversify your trading assets with stocks. Sometimes with trading Forex, it's sort of a patience game where you have to wait for the right trade setup to come along and then finally execute a trade. So if you're the type that finds you might become a little bit impatient in times and you trade a little bit too early, then it's a good idea to start looking at some stocks to pass through some time. So then that way you're not so eager to execute a trade. I know it can be very exciting, especially on one day if you make a couple $1,000 it's very natural for anyone to want to do that again. But it's always very important that you maintain good discipline and are very patient when it comes to trading. So take a look at some stocks, create some trade setups on some stocks that you like, and once the market starts moving in that direction where you want it to, then you can then decide if you want to get into some sort of short, or if you want to get into a long position, or if you're just going to wait it out even further. So it all really depends. Okay, so CMC markets, guys, is who I recommend for going with stock trading. Thanks for watching.